Ira Epstein of Linn Associates with your weekend edition of the Financial Market Wrap-Up for this Saturday, and we are February 20th, 2021. All right, my friends, as we look at the market, understand what's been going on. The battle that is taking place is the battle between rising interest rates, what it does for the economy, the U.S. dollar, because those rates in the back end are moving higher. They're not under 1% in the 10-year notes. They're at 1.34. We may end up at a 1.5. Just 6 months ago, the talk was what? Were we going to go to a negative interest rate? Now the question is, are we going to go to a 2% interest rate on the 10-year? The short-term end of the market still low, and these are relatively low rates, but they are coming up and they compete with things. The first thing they've been competing with is gold. Without the inflation scenario just yet here, we keep hearing the words, we're going to reflate, but you're not there yet with the reflation. And what does it do? Well, gold's been out of favor. Is Bitcoin, Ethereum, they have taken the leadership role away. Whether that's warranted or not, I don't know. Elon Musk today went on and tweeted that he thinks that suddenly Bitcoin and Ethereum look a bit high. What will that do? Well, he seems to be the guru of that. He was certainly the leader, believed in it, talked about it, got the followers, and what he says, he's, for the moment, the gospel. We know what happens. It's just a question of when you start stumbling. On the energy sector, well, warmer weather will break the back of what? That cold weather spell that they had. That doesn't mean you're going to break the back of prices, but you break the back of that scenario. So that is out of the way. Yeah, we'll have the lingering impacts, but that cold spell is pretty much done. Thank God for the people there. It'll be gradual improving. I'm here in Chicago. We still have a foot of snow on the ground. Can't walk out of the house and go anywhere. Can't park. I live right downtown Chicago. All the parking places are full of snow. And I mean mounds of it as the street plows have pushed it there. When you're looking at the E-mini S&P 500 index on a monthly basis, you're still up. And for the month, you're up 5.34%. That used to be a year's gain that people were happy with. No longer for that. When you and I take a look now at the weekly chart of closes, same thing. You got your bias up. You've backed off. You're down for the week 0.71% from an all-time high close. Not much of a correction. When we take a look at the chart action here, you can see that you've got a pattern that isn't trending. Now, what do I mean? You made a break low 3 weeks ago, then a new rally high over the past 2 weeks. So you have a pattern of a higher high and a lower low. That's not a trend. We can certainly see that you've made new highs on the move. So we know that something's at work. And what's at work is the bias. As long as the market stays over the 18-week average of closes, the bias is up. You might say the trend from here, but you have to have some manner other than just looking at it and saying, well, that's the trend. If you're going to measure it with any qualitative analysis, how do you do it? Or quantitative is numbers. You tell me. Just saying, well, it's going higher, I guess that's qualitative. Quantitative, what do you do? Well, that's where the swing line comes in, because it looks at prior lows and highs and it helps you define it. Where's the resistance? Up at the upper Bollinger Band, but you haven't hit that since back in December. What's been at work on this chart is, if you're a subscriber in my morning videos, they're called window envelopes. And they're standard deviations from the 18-day average. They run in a deviation pattern. I publish them every day, several times a day for my subscribers, and I give you what they're doing, because those are the resistance points right now at work. I'd love to say, well, it keeps hitting the upper Bollinger Band and backing away. It's not the case. Momentum, locked in, embedded in the slow stochastic. So bias up, not the trend. Momentum up all the way through, bias momentum, and embedded reading, bullish until that's lost. I contend the traders are buying the breaks, looking for new highs in the market. I wish I could say the Bollinger Band, but it's really the window envelope. It could be the Bollinger Band eventually. In the weekly Nasdaq, do we have the same thing? Not quite. You got the higher highs, higher lows embedded. You have a outside week down. So you made a high higher than last week's high, and low lower than last week's low. Should you take out this week's high this coming week, then I look for the Bollinger Band to be hit. Without that, you could back off here. Does that mean the pros will stop not buying it? Not until they lose this reading. So on a weekly chart, I think they're going to be looking at this market to come in on the breaks. There's a moving average I use for that I show my weekend subscribers. It's already been posted. I posted everything yesterday and Friday for them. They got to see that already. On the Dow, embedded reading, so you know I'm bullish right off the bat. You're over the 18-week average of closes. The bias is up. You don't have, just like we had in the S&P, you got a lower and low and a higher high, not a trend. But that doesn't take the forefront of the market. This does. So on the pullbacks, I still look to see the buying all week long. In the Russell, more similar, if you would, to what was it, the Dow, with the higher lows, higher highs. Got it. Now, this chart on the daily basis gave me fits this week, and I absolutely took a loss on a daily basis on the chart. The weekly doesn't show that problem. The weekly is showing the market's still there. So it depends if you're looking from the weekly basis or the daily. And yes, folks, I get losing trades. What person doesn't? And what person, most people don't even talk about them. I don't mind talking about them. I hate having them. But when they happen, it just didn't work. You lost the embedded reading on the daily basis, but you kept it on the weekly. In the 30-year bond, you keep running to new lows. Now, I wasn't quite expecting it to get that easily through the 100-week average. I thought it would now come back to it last week. So now if we rally, what I expected to be support probably becomes resistance at 166.30. This market is still bearish. Is it embedding? Well, you've got both numbers under 20 rather there for this week. You had both under 20 last week, both the week before. So you got 3 weeks in a row. It's embedded. So until the red line closes back above 20, I contend the pros are going to be selling this market rather aggressively on the rallies in there. 10-year note, it's the same pattern? No. You're not embedded. You're oversold under the lower Bollinger Band. Yeah, I can argue somewhere between here and here, the next 2 points will be big support. You realize that could kick up to 137 or so, the interest rates, maybe 1.4. I don't know. I'd have to do the math on it, but boy, that's a lot. I think the market will get back over the Bollinger Band, but I think it is in an oversold condition in a downtrend. Then we get over to the dollar index, which is basically, I think it's been a contra-trend rally. I think this is the contra-trend price. As long as you've been able to stay under this 18-week average, I believe that the bias is down. And when you get these bounces from the Bollinger Band, that seems to me a logical spot like they did here to get to and then fail and resume. I'm looking for that to happen. Are we out of an oversold condition? Not yet. Could be when you reopen Sunday night, but I have to see what the market does. In the eurocurrency, it's the flip-flop of that. You came down from the Bollinger Band to the 18-week average to find your support. Now, this market gets bearish again if you get under 119.60.5, and you negate this downtrend pattern if you get over 121.97. We're getting to a number here where something's going to happen. It's going to prove it one way or the other. In the Canadian dollar, overbought, not embedded. That's the first thing. How many weeks do we have where we're over 80? One. Just one this week. So just overbought. Higher lows, higher highs, bias up, but overbought. Japanese yen, oversold, finding support. It's very hard to push against that lower Bollinger Band, these black dashed lines. Why? Because the algorithm's built that 95% of the time, the market will stay within them, and algo traders and traders that understand the theory of this, they're reluctant to press it. Doesn't mean you can't go lower, but they don't want to be heavy on the short side, typically under that, because the algorithm says you're going to stay over that number. In Bitcoin, still a runaway to the upside. Now, as I said, Elon Musk made a statement maybe a little high. Well, that sort of fits in. You got 2 weeks in a row over the upper Bollinger Band. You rarely stay over it much longer than that. So a pullback, yeah. You did stay over it up here over it, but you just broke out of sideways action. This is very different. So we'll see if it does it. Am I bearish? Absolutely not. But I also don't want to be a buyer over Bollinger Bands ever. EVER. In the Brent versus WTI crude, all right? So the market found its footing at the 291 level. That's your battle zone in the market. Now you're back up to 367, which tells me on pullbacks that should be something of a support zone. Brent is stronger than WTI. You got up into Brent, you're still embedded. Resistance, upper Bollinger Band. It has a way of stopping these rallies. I think you can see that. You fight there. Doesn't mean you can't work higher, but to do it, you move to the right-hand side typically, not the left. In addition, as I said, you've got to deal with the fact that suddenly the oil's going to be working in the refineries, the demand's going to come back, and those oil lines are going to come back on. Does it happen in 24 hours? No, but does it happen within a week? Typically, yes. And demand will get back to normal and the lines will fill up again. Same in WTI. So if you're going to play this weather event, in my opinion, it's over. It doesn't mean that the market's going to be less bullish, but I do think off of that you could get a slight pullback. Gasoline has so much going for it. You got to make up what the refineries couldn't do. Parts of the country are absolutely gorgeous. There's demand for the gasoline and spring is coming. So big breaks in the market, yeah, if they come, that's fine. But I think they'll be well bought. I think you're getting into that time of year where you want to pay attention to all that. I cover this in great detail with specific. I want you to buy here. I want you to sell there. Every morning, Monday through Friday at 5:40 a.m. I start recording my live webinars. Well, they're my live videos. Let's call them that. I was thinking of making them a live webinar as I record them. That's been an idea that I've had in my head. And then you can ask questions and we go through that early in the morning. It's just an idea. If you like that idea, write me. But you have to be a paid subscriber to get in. It's not open to the public. As you can see, what we have here, there's many ways to watch my videos. Your hand phone, tablets, your computer. I cover the morning news that I've seen in Asia, Europe, bring it to you. I cover all these markets in an exact sequence each and every time. Over 40 charts, sometimes 45 at a time. The videos can last 15 to 25 minutes. What do they cost? Well, if you're a Starbucks or a Pete's or whatever your custom coffee, $7.95. Yeah, think of the tip you leave. You're about there for a large cup of custom coffee or one of the fancy drinks, and you get 30 days of this. That includes Saturdays, weekly videos for the subscribers, where I only do the weekly charts, give you the longer term buy and sell. How do you do this? Just go to our website under the word research. It's all explained there. You sign up online and away you go. I hope you do so. If you like this video, by the way, would you do me a favor? Click you like it on YouTube. I'm Ira Epstein. Take care.